one. Hello, this is Dave, and welcome to Equity Story. It is the 2nd of June, 2022.
Are you sure?
I'm just checking. I had to look down at the screen. But
you might be living in a twilight zone. Maybe we are, because the markets are so, yeah.
Yeah, every time I look at the date, I think, oh my God, I'm getting old, Wolf. Anyway, this is just general share advice and not personal advice. And let's start looking at some of today's news. And Wolfie, let's start off with Wesfarmers, because they came out with an in-depth presentation, very, very in-depth.
Yep.
This morning you said to me, "Oh, Dave, you know, you're panicking again." You say, "Dave, I don't know how the market's going to take it. I don't know. I'm really, really worried." Tell me what you were worried about, and why you're okay now.
Because there was a lot of information. There was about 50 pages. They've gone through each division, right, in careful manner, presenting to how things are going. So you never know how the markets are going to react. Whenever there's a update, you're always nervous, especially in this market. While I like some parts of it, like the strong chemicals division, some things are not going great. I mean, the actual digital side, they've upped their actual loss from 10 million to 100 million for the financial year. They're going to lose 100 million in this division, Dave. I'm thinking, oh my God, get rid of this bloody division. It's crap. But, there's obviously there's stuff that's going quite well. So potentially it's going to be a smaller impact on the good stuff. So there was a lot of, because there's a lot of levers in Wesfarmers, a lot of divisions, it can get messy, and you just don't know where to actually think that where's the good stuff, where's the bad stuff. Well, overall, I'm still happy with it.
But this division that worries you, what does it do exactly?
So this is the digital division. So it's things like Catch Group, right? So the sales, you go and buy something cheap, like a Kogan. That's what Catch Group is. It's another real rival to Kogan.
Okay, but obviously management see forward looking that this could be.
Well, I don't like that division at all, because there was an article like a week ago about this particular problem, is that they bought it and they probably overpaid by significant amounts, right? They bought it at the top of its market, this Catch Group. Yeah. So I think that eventually they'll probably get rid of it. And I don't like it at all. I think they should just stick to the industrial stuff they know very, very well. Your chemicals, they used to produce coal. Now they picked up this price line, and that's the sort of stuff I love to see them. Bunnings, that's the best stuff for them. I'm not sure about this online stuff. They don't want to. I don't want them to see them transform themselves into a tech stock, because that's not their best.
How can you lose 100 million on this?
Yeah, because they need to spend a lot of money.
But what on computers? I mean, what?
Well, no, I mean, they're going to probably marketing. They're going to probably redo the whole space in it, because it's just not going to be performing very well. So, I don't know where the money's going to, but I presume that's the stuff that they're going to be plowing it into, make it more sustainable over the long term.
Okay, but the other sections are all doing well, so you're sort of okay.
Yeah, look, they've got they go Kmart, Target, and again, how long are they going to go with this Target Kmart business? That, if I asked you, Dave, tell me the difference between Target and Kmart, I bet you wouldn't have a clue, right? What makes the two different stuff? To me, they're the same. I go for the same things with the Target or Kmart, whatever's closer. So I don't understand the difference. Why would you own both? And I don't think they've ever differentiated the two.
Why don't they just put them together? And
I don't know. I don't get it. And they've been struggling with this sort of concept for the last 10 years at least. So I don't know why
they've tried to sell them before, haven't they? But
exactly. So for me, another troublesome point, right? Office works well. So they've got a lot of good stuff, but there's a couple of things that I don't like about it. But you're not going to get everything great. So overall, still good. Wesfarmers is still good. And I'm just glad it didn't collapse today. It's still holding on quite well.
Okay. DVP, Wolf, obviously following the man here, but we've had to get out of this when it broke trend.
Yep.
Some good news today. Can you fill us in?
Yeah, it was actually ANX. Its partner that's drilling. It's what is it? one of the projects they've actually bought of them, which they own, NX owns 70% of. So good drilling results, and it looks like it's going to, maybe a good little trading stock potentially.
Yeah, actually, Wolf, I think you've got a good point here, champion, because the chart's starting to look quite good. And when you say good drilling results, the market cap is what? It's had a bit of a rise today, maybe 36 or 37 million, right? But this is
decent stuff.
Decent stuff, right? So you got you've got a whole list of zinc and
right?
copper and
copper, zinc,
lead,
silver,
and gold.
Yeah,
You got the whole lot.
Yeah, pretty much. I mean, all the main metals, right? Zinc, leads, copper. What else can you ask for? So this is why you don't have to have huge intercept, 200 meters wide, when you've got, in the smaller one, you've got all three metals.
Yeah, just looking at it here, you've got
that's the project.
Yeah, and it's importantly, it's this is the trouble with PEX. PEX, from memory, similar stuff, right? But very deep. This is at 40 meters, so it looks a lot better. Very, very shallow, yeah.
And this is an old mine. Wim Creek has been mined many years. So it's a pretty well endowed area. We know that this is a pretty good space to go and get some base metals out of.
Okay, listen, it's all these sort of high risk, but I think if the chart, I think this is worth a punt.
Would you wait till tomorrow though? I mean, Friday you got, you never know what's going to happen overnight, especially at the moment.
Well, so listen, you could do, but I mean, if you've got that chart, I think looking like that by close tomorrow, it's puntable definitely.
Okay, fair enough. Well, let's talk about it tomorrow.
Have they got more? I suppose. Sorry, Wolf. What I should be asking you: are there more drill results? Are we waiting for more drill results?
It's a good question. I can't answer it. Go back to that announcement and see what it says. I didn't see it, so presumably they will, but don't quote me on that. Let's have a look at the announcement. Have you still got it open, or you closed it?
It's okay. Let's bring it over. Here we go.
Yeah, go on. Let's have a look. What did it say?
Total of 4 holes were drilled. 2 were specially designed for geographic.
Keep going down. Okay. Yeah, keep going down. Exploration, down plunge. Sorry, go. RC, there we go. Go up a little bit. RC drilling is planned to test this down plunge potential during the next phase. So I think they've finished off the phase. You've got another phase coming, which will commence shortly. So I'd say you're going to have some news flow over the next 3 months.
Okay, so maybe, listen, yeah, not a hurry, but looking potentially puntable, yeah?
Yep, potentially puntable, absolutely.
MCR, Wolf. Good looking chart, and they topped it up today with, again, an announcement. How strong or how weak was this?
It sort of flies in between for me. Really strong grades, 6, 7, 8% nickel, incredible. But you're looking at, what is it, 3.75, 4.7. So, decent, but nothing incredible. I obviously love the grades. That's really good. So overall, it's still looking pretty good, Dave. So I think it's much more on a glass half full than a glass half empty here. So those sort of intercepts will give them more probably mine life to whatever they're doing at the moment at Golden Mile.
All right, and as I said, it's just holding the share price in its place. Wolf, Prometheus looked like a very strong contract win.
Yeah, it was, but it's not going to help their price, is it? Because they need to probably come up with a $200 million contract to get this PE lower. That's the problem, Dave. It's the PE.
Yeah, it is, but it's funny. It's just at different times. If they'd put this announcement out 2 or 3 years ago, they'd have been up 10% and given them another. But listen, 28 million deal with Alina Health over 7 years. Just bring it on, baby.
Yeah, I think, look, they are in a phase, and a lot of stocks are in this phase where it will probably go sideways and wait for that PE to catch up to the actual price. So for me, the risk is to the downside, not the upside. And they need to keep coming up with those contracts.
Yeah, and still obviously a ridiculous PE of 111.
Yep.
Where really, Wolf, like you said, you could easily come back down to $30 or $25.
Absolutely.
CAI. So it's been on a real trend, this story, Wolf, and that's why I sort of picked it up. What did you make of those results?
I didn't see them. So apologies for that. Let me just have a look what they've come up with. Blue spec, I do remember looking at blue spec not too long ago. So I presume they're pretty good. You're looking at 52 meters at 1.4, 20 meters at 1.4. Let me see what else. We've got 10 meters at 1.9. So look, the grades are average, but nice thicknesses, 52, 20, and 44, and 10. They're okay. So look, they're talking about strong drilling results. Yeah, depends who you ask, right? For me, okay.
Shallow, I suppose, is a bit of a
Yeah, probably the key is shallow, yes.
So, okay, would you say half glass full?
I'd say yes, because I think they're right saying potential, yes. So glass half full.
All right, thanks, Wolfie.
Mm-hmm.
Now, lastly but not least, announcements today, BFC. So I think this is a bunch of lawyers put this company together from memory, and it's been really poor performer. It got all excited to begin with, and since then it's been on a long way down. So the chart still isn't good enough, Wolf, to buy this. I think you've got to see this over 8 cents. Are you seeing anything here of interest?
No, the only thing of interest is it's in that food space, right? So potentially that's what might be driving this price up higher. I think today's update was okay, nothing incredible. So yeah, for me, better stories out there in this space. But it is in that sector, so we need to keep an eye on it.
All right, Wolf. So really, all the announcements today. Okay, Wesfarmers holding up. Obviously, possibly ANX is really the only one that maybe there's potentially a punt in here over the next few months. You could see if they have more success, that market cap at least being more than 33 or 38 million. Now, so let's have a look at some broker upgrades today, Wolf.
Yep.
And there were a few that were, I think, really quite interesting. So the first one is AGL. And like I said, I'm sort of really liking this chart. Don't ask me why, I've just got a feeling about it. And interestingly, Morgan's came out and they've got an add on here with a target price just at 10.08, so maybe just under 9.87. And what they're arguing here is that rising retail tariffs in FY23 and the prospect for further rises in FY24 provide a strong tailwind for AGL's Energy's vertically integrated position. This comes as electricity futures reach new highs and there's upward pressure on wholesale pricing. So they're sort of reasonably bullish, but I think the reason I'm bullish on this one is hopefully we're just going to see a little bit more interest from Mr. Cannon Brooks and help bring this one a little bit higher. So quite like the AGL story at the moment. I'm sort of with Morgan's on that one. Okay. The other one is Wolf BOE. So I'll just have a look at this for you because again, this is another sort of interesting. This is actually quite a big. So Macquarie have come out. This is obviously a uranium story with a 320 target price somewhere up here. The chart's reasonably nice, and so what Macquarie believes is that Boss's BOE's Energy has approved the final investment decision for the restart and the development of the Honeymoon Uranium Project. First production is pegged for the December quarter of 2023. So they've got an outperform and a target around 320. So not a bad looking chart. And maybe if it can get back over 233, could be a nice little trade for next week, Wolf.
Yeah, but look at definitely. I'm just looking at the uranium price. It's actually up for the week, and it's actually one of the best performers, up 4.23% for the week. It hasn't had a great month, but it's starting to look better again. Maybe that's why it's starting to bounce off the trend lines, right? So definitely one to watch for next week and see where we're at.
All right, the one that I think I'm sort of maybe most interested in, and it's got the best chart, is S32.
Mm-hmm.
So Macquarie put a target price of 690 on this one. So that's a decent move up. And Macquarie says the company is trading on attractive multiples to peers and suspects a return to shareholders may be on the cards. The broker says South 32 is experiencing an acceleration in earnings growth as high spot prices flow into the coffers. So we've been bullish on this one. Good to see Macquarie are bullish on it.
Well, we've got much better name than Macquarie.
Well, they follow us, don't they? So good to see Macquarie following us and listening to us, and listening to and watching every single obviously talk we give. So thank you for that. But again, it looks good, Wolf, and a decent target price. So if you're in this, hold it. If you're not in it, I'll tell you what, it's trending quite nicely.
We have a price at the end of the week.
Yeah,
around the $5, so you could have a nice little stock for next week.
Definitely, Wolf. I think you'd be looking to definitely buy this one. And next one was Worley.
That's a big upgrade. Worley was the biggest upgrade today. That was very bullish. I mean, 14 to 16, that's a big move.
Yeah, just having a look. Well, there was two, right?
Mm-hmm.
So Ordminet actually had a Lighten on it at a $12 target price. And UBS had a buy with a $16.40 target price on it.
Mm-hmm.
So
who do you believe?
Who do you believe? I believe you, Wolf. So who do you believe?
Well, I believe myself. So basically, I agree with UBS's view that Worley is a great place. I mean, especially when you look at the latest update, right? Where they're pointing out the reasons why they are well positioned for the future. And they're talking about the climate issues and how they're going to address that through the work they're going to do for some of these greenfield type projects that are looking at renewables. So absolutely, I think Worley has got a good runway ahead of it, and it's all about whether they can execute well. Because I don't think we're moving away now from this move towards green energy. So as long as they can execute well, Worley is going to do quite well over the next 5 to 10 years.
Yeah, Ordminet, their worry was just basically they're trading on high multiples.
Okay,
that's
their view, of course. I mean, you got to respect everyone's view, right? No problems.
Yeah, I mean, what's it trading on now? 55 times?
Well, let me have a look. I didn't think it was that expensive. Off memory, I think it was quite low actually. Let me have a look. So they think that's let me see, 54. All right, so that's going to come down because the actual it's rapidly. So go have a look at that FN Arena and see what PE they've got in the next 2 or 3 years. That will give you an idea why they think it's expensive.
Can't you do that on Reuters?
No, because we're looking at just Ordminet's, right? Their view. So remember, every broker will have the different assumptions, so the P's will be very different if they've got different assumptions in a future years. So we just have to have a look at that Ordminet's FN Arena statement, and you can see on there what they've coming out with the PE.
Let me bear with me, Wolf.
That's okay. Well, you asked the question, so you're just throwing everything out here. Let's have a look. We might as well.
So they've got 22 forecasts, 25.3.
Yep, and then the next
23 forecasts at 20.4.
Okay, so they think that 2020 is expensive? I don't think so. Not for a growth company in this space. But you can argue it on the opposite, saying, yeah, look at what happened to the rest of the market. It's trading probably at 15 and 14. Well, then, and then it's fair enough. But it's just someone's opinion, which is, like I said, you got to respect that.
Well, that's why, again, it's like everything, isn't it, Wolf? You just got to use the charts.
Yeah.
Yeah, I mean,
and stick to the guru, me.
So Wolfie, just have a look at this. I mean, if you're in it, you're holding it, right?
Mm-hmm.
So I think you just got to use that daily on it. If it goes below 14, then you're out.
I agree. It's a fairly simple equation here.
And the other one that had looked interesting, Wolf, by the brokers was DEG. So again, it's not trading, so we can't go there. But this was a really high target price around. I
think it was.
Yeah, $2. But obviously, let me have a look at that. So
the problem with non-producers, it's you could have a price target of $5, and it's pretty meaningless. But at least they have got a fairly bullish view of the gray, right? If things pan out as they assume. So right now, for them to get to the $2, we need probably a strong gold price, and they need to execute and get into production.
Yeah, definitely, Wolf. But at the moment, it's not a buy; it's below trend. But if it gets above trend, then obviously having broker upgrades like that just makes it a little bit more interesting.
Definitely.
Wolf, just having obviously a look at the stocks on our market being fairly hard going at the moment. We're having a look at some in America, which I think look quite interesting. And there's actually a number there. And the first one is this UNH, United Health Group, which I think it's worth members getting on their radar and having a look at. It looks very, very good. The other one is T. We're actually talking about putting this in as one of our dividend stocks, but being in America, there's obviously there's risks with currencies and and this sort of thing. But really, AT&T, one of the biggest companies in the world, giving a pretty solid little 5.5% dividend. For those people looking for a dividend, I think it could be worth having a look at. And the chart, Wolf, is looking pretty good as well. So it looks like there's a little bit of growth there. So excellent chart and a pretty strong dividend. What is most probably a pretty defensive play.
Dave, I mean, just to quickly comparisons, UNH, probably the best comparison here in Australia will be MPL, right, which is Medibank Private, because United Health is a health insurer in the US. It's interesting, isn't it, how they're doing quite well, yet our private health insurers are sort of, sideways at best. But there is possibility. It's actually not too bad, right? It's actually holding okay. And with TNT, of course, or Telstra is the closest comparison, and that's going okay. So you've got that. If you don't want to trade the American stocks, you've got alternatives here with maybe not the best looking charts, but at least they are holding on.
Yeah, and Telstra is just holding on, isn't it?
Yep.
Wolf, and another sort of few ideas, and obviously we put these on. We had these on American stocks. Is NOC, so some of these war stocks. NOC and LMT, so Lockheed Martin, some of the biggest weapons producers.
Now, we don't have anything similar here in Australia, Dave, so you've got to buy them. If you want weapons, you go to America.
Yeah, but I mean, listen, they look very strong in the charts. And again, you can hear that Biden is spending billions and billions of dollars on sending weapons to Ukraine. And you can see those stories holding up reasonably well over the next 6 months. And funny enough, again, another defensive play, Johnson & Johnson holding pretty good. So there's 5 stocks in America, and I actually put these on the US trends this week. I think it maybe well worth people having a little look at here.
Definitely. Well, this is defensive type companies. So in a market that's very not nice, right? It's fluctuating a lot. People tend to gravitate towards this sort of big companies like your Johnson & Johnson, AT&T, and UNH, and the defensive war stocks like NOC and LMT. So absolutely agree, and looks like they're going to be here for a little bit longer.
All right, so thank you very much, Wolf. Just to cap, maybe ANX a trade here. Look at T, a dividend story that is trending quite nice in America. JNJ, NOC, LMT, UNH. American stocks trending quite nicely, well worth possibly having a look at. And some interesting broker upgrades. AGL, I can understand trading that one and maybe trying to look for that $10. BOE, if it can get above that 234, 235, well worth a trade maybe by the end of the week. I think S32 for me is a standout, good chart, good upgrade. It's hitting goals every single which way it can at the moment, Wolf. Worley, like you said, conflicted broker reports, but one certainly bullish, but you can't argue with that chart. And again, you can have a nice little stop on this. In fact, Wolf, if people are in this, I can give you a nice little stop on it. It's got a, what's that? Open, sorry, I have to give you a close price. There we go. You've got a close. So you've got a nice little stop about 14.74 on it. If you wanted to have a tight trade on it, Wolf. And if you wanted to believe in it a little bit more, you could go around that 13.90. But again, a good looking chart. And obviously De Grey, we'll trade it as soon as this can jump above trend. We'll have a look at it and we'll trade it. Okay. Saying that, Wolf, I'm done. Did you have anything to add to that?
I'm done.
All right. On that note, thank you very much, everybody. And we look forward. Tomorrow's a big day. We've got live, haven't we, Wolf? We've got another one. And thank you very much.
See ya, guys.